Good morning, team. So last week finished with the risk-off environment. There's concerns about inflation and coming recession. Now that kind of all changed yesterday. It didn't, not a huge amount. It was just very subdued, I guess. But certainly the risk-off turned to risk-on. And that was mainly thanks to the Chinese GDP figure, which came out much stronger than expected. That's a pretty big beat. We can also see the the Canadian inflation, UK inflations tonight. The Canadian inflation is still stubbornly high, which makes their move last week of not raising interest rates a bit of a surprise, I guess. So UK unemployment starting to tick up, and that would be expected as you head into a recession, as their interest rates try and battle their inflation of 10.4%. They're expecting it to dip a little, but still 10% inflation is quite high when you're looking at everyone else. So Chinese GDP, what I wanted to point out here, 4.5%, still a long way from the glory days of sort of 10% around the noughties, but it's starting to track in that direction, which is a positive sign for China and therefore the commodity window or the commodity picture, and we're seeing the commodity picture starting to pick up there in the Bloomberg index. So that's all right. Copper not doing much, but I guess when we look at it in the broader picture, we're seeing bonds just had a pretty quiet day. Stocks flip-flopped, was up and got pushed down and closed unchanged effectively. As we can see here on the daily, it really sort of not tracking too far up against this previous high here, and I guess everybody's waiting for the other shoe to fall, and what that's going to be, well, you don't know what a black swan looks like until you see it. VIX though, no one seems to be too worried about it. VIX is well off. And then we come into the dollar index, which also drifted lower overnight as that risk-on environment. Markets don't see the need for safe haven assets. So yeah, a bit of a nothing, but I guess the bigger picture of Chinese growth, will their growth story save the day again, or particularly for Australia. Dollar yen, not much happening there. The pound, we mentioned last week that you probably should see a retracement. We've got that. I was looking for it to get down to this horizontal here that has not, and it may not now, with the market sort of turning as it has. Hourly's now heading in that direction, and the 4 hour should be back on track for this trend as well. So that's the pound looking stronger, even though they've got their inflation numbers tonight. That story might change. Again, with the euro, I was looking for it to sort of maybe get down to this level at least. Again, it hasn't got there as the market turned bullish, or the risk-on environment gave weakness to the US dollar, and that's what we see, that turnaround from the risk-off last week. Excuse me. Aussie dollar should naturally perform well with the China story, but again, it's just chopping either side of that 67 cent line. And we'll put it at 67, and we'll sync it across time frames. You can see how much it's like a magnet, can't get too far away from it. So where to from here? fundamentally it should be doing okay. If China's continues to grow like that, then the commodity picture for Australia looks pretty healthy. Outside of that, I don't see much health for Australia, with inflation continuing to bite the consumer and the government continuing to do sweet FA about it. Looking ahead, what do we have? We've got UK inflation, Kiwi inflation, and then a raft of PMI, so a pretty quiet week. I think today is the last day that Fed heads can talk as they go into the 2-week lockdown before the FOMC. But then next week we've got some Aussie inflation and US GDP numbers, and the US big one, the one that the Fed watches, is that inflation number. So a reasonably decent week for data next week, but not much for the rest of this week. But I'll be back tomorrow and we'll talk to you then.